Hey traders, welcome back. So in today's video we are going to focus on market structure. So now in simple terms, what is market structure? Market structure shows you how price moves in a market. So market structure shows you how price moves in a market. It helps you understand who is in control, whether buyers are in control or sellers are in control. So let's take a look at an example right here. So in a bullish structure, price keeps making higher highs and higher lows. Okay, so the ones at the top, these are higher highs because price keeps on making a high that is higher than the previous high. Okay, as you can see, this is the high and the next high is higher than the previous high, right, which makes it a higher high. And also this high is lower than the next high, meaning this high is higher than the previous high, which makes it a higher high, right? And the cycle continues. So this is higher highs and higher lows. So the ones at the bottoms, these are higher lows. Okay, and this means that buyers control the market, right? So now let's take a look at a downtrend right here. So this is a downtrend or a bearish structure. Okay, so now in a bearish structure, price makes lower highs and lower lows, right? So now price makes what? Lower highs and lower lows. Okay, so I hope this makes sense, right? So these are lower highs, right? So this is a high, but if you look closely, this high right here is lower than the previous high. Okay, if you place something like this, you can see that this is a lower high. So in a downtrend, price makes lower highs and lower lows. So this low also is lower than the previous high, which makes it a lower high. Okay, and right here at the bottoms we have lower lows. So now this is a low and this low right here is lower than the previous low, which makes it a lower low. So when you see something like this, this means that what? Sellers are in control. Sellers control the market, right? So now, okay, we also have a ranging market. Okay, so in a ranging market, price moves between support and resistance. So let's say we have something like this. Okay, so now price is only going to move between support and resistance, right? So this is a ranging market. So this is a bullish market and this one right here is a bearish market, right? Let's do this. This is a bullish market and this is a bearish market, right? And right here, this is a ranging market, right? This is where price moves between support and resistance, right? So now in a bullish structure, buyers are in control and you're going to determine this by higher highs and higher lows. So in a bearish structure, sellers are in control. You are going to determine this by lower highs and lower lows, right? When you see lower highs and lower lows, you know that sellers are in control. Alright traders, so now it's time for us to look at a real chart example, right? So let's start by removing everything here. So as you can see, this is gold on the daily time frame. We can actually start on the weekly time frame. So now we are looking at gold on the weekly time frame. So as you can see, gold has been very bullish. So this is on the weekly time frame and you can see the candlesticks right here. This has been very bullish, right? So now on the weekly time frame, it's not easy for you to see the market structure, right? But trust me, it's there. Like for example, right here, you can see there was an impulse, then a bit of correction, then another impulse to the upside, right? So now let's move over to the lower time frames. So now we are on the daily time frame. Still on the daily time frame, we don't see much of the market structure right here. We only see a strong bullish move to the upside. Okay, let's move over to the 4-hour time frame. So now we are on the 4-hour time frame. Okay, let's start somewhere around here. Okay, so now we are on the 4-hour time frame, and you can start to see the market structure right here, right? You can see we have an impulse, correction, impulse, correction, impulse, correction, impulse. Okay, remember what I said, in a bullish market you are going to see higher highs and higher lows. Okay, and right here you can see we do have higher highs and higher lows. So this confirms that we are in a bullish market. It confirms that buyers are in control, right? So now let's take a look at this. Actually, let's go on the 1-hour time frame. Okay, so now this is on the 1-hour time frame. So we can see there was a bullish move to the upside, and then we have this really nice correction movement and another bullish, and then correction. This is how market moves, guys. You don't have to complicate these things. Impulse, correction, impulse, right? So if you look closely right here, price moved up, came back to retest this low right here. Okay, came back to retest this low, and then started pushing to the upside, right? So now oftentimes you are going to see market coming back to retest this high right here. Okay, so we have a really nice corrective move right here, and most of the time you are going to see market going to the upside and then coming back to retest this this high before it start going to the upside, right? So let me remove this, and again you can see this is a nice corrective movement right here. This is a nice corrective movement, and you can simply enter upon this break right here. Okay, you can enter upon this break and you continue going to the upside, right? And as we continue going up, you can see everywhere, guys, you are going to see this. So this is a bullish move. So this is a bullish market, and you can see we have impulse and then correction, then another impulse to the upside, right? So also right here you can enter upon this break. Okay, you can enter upon this break, because now you have your bias. Your bias is bullish because you have determined that we have higher highs and higher lows. You have determined that buyers are in control. So this means that we are looking for buying opportunities. Okay, you're not going to look for selling opportunities in a bullish market. You know, that doesn't make sense. So in a bullish market you are going to look for buying opportunities, and in a selling market, in a bearish market, you are going to look for selling opportunities. Okay, so now as we continue going up, you can see, just look at this. We have nice impulse move, and then a correction, then another impulse, right? So you are going to see this over and over again. So it's very important for you as a trader to have a repeatable system. Okay, so as you can see, this is something that happens over and over again. You can see from the beginning there was an impulse correction, impulse correction. We've been having impulse correction, impulse correction. As the market continues, you can see the market goes up and corrects, then goes up again. Okay, here we can see an impulse up, then a retest. This was a small retest, then another push up to the upside. Okay, until right here, until right here. Okay, so this is the highest point price has reached. This is the highest point. We can see we had this high, price reversed to the downside and then came back again to give us another high right here. So now this pattern is a double top. This is a very good reversal pattern. This is a really nice reversal pattern. So whenever you see a double top, you know that this is a reversal pattern. So the market has been bullish. So once you see a double top like this is a good signal. So this is a good sign that the market might actually change direction. This is a good reversal pattern, right? So the market has been bullish. There's a high chance that the market can be bearish right now. Doesn't mean that the market is going to be bearish. Okay, this is just a sign. This is a signal that the market might be changing hands, right? Just something that you have to keep in mind. Okay, we see price reached this high, came down, went up again, failed to break above, and gave us another high right here, and started pushing to the downside, right? We can see this is a double top. This is a good reversal pattern. So now let's see what's happening right here. Okay, so now remember, we have a double top at the top right here, and we know this is a good reversal pattern, right? So now let us play around with this. Okay, so let's say maybe we take a line and connect maybe this low. Let's connect this low. So we're going to have something like this, right? And then maybe duplicate this, and we're going to have something like this, right? So now this looks more like a continuation pattern, right? Remember, we've been having impulse correction, right? So again, we do have an impulse right here. So does it mean this is a correction? Does it mean this is a correction? Maybe we might have another bullish move to the upside. We don't know. We don't know, and we can never know for sure, right? But now remember, we do have double top here at the top, right? So now if we take a look at a different perspective, right, we have a double top. We know a double top is a reversal pattern. Okay, this means that we can now start looking for selling opportunities, right? So now if we take this move as an impulse to the downside, and maybe draw a line, something like this. So here we're connecting this high and something here. Okay, when we analyzing the market, we're trying to to predict what the next move is going to be. Okay, so now if we take this move to the downside as an impulse to the downside, right, and maybe because let's say we have this right here, so we have 1 2 3, so this is a valid trend line right here. This is a valid trend line. The market went down, bounced from here, went up, came back and bounced again, went up, bounced again right here. Okay, so this makes it a valid trend line right here. Okay, so maybe if price continues to go up, and then eventually it might break to the downside, right? So a double top is a reversal signal, is a reversal pattern. Okay, So and we see an impulse to the downside. So does it mean this maybe is a correction? It could be. We're not sure. For now, we are not sure. And for you as a beginner, it's very important to be patient. So patience is very, very important, guys. For now, we just have to wait and see what is going to happen in the market. So if price happens to behave like this, the safest way to enter would be upon this break right here, right? Or unless if price comes back to retest, if price comes back to retest this low, we might enter a sell somewhere around here. We might enter a sell position somewhere around here. Okay, so now what is important right here is to be patient. So we have to wait and see what is going to happen right here. Okay, so it's very important for you to understand the market structure. It's very important for you to know how to read price action.